Hello, welcome to Wealth Transfer. We're going to dig deep into the Chinese data, and the reason you're going to want to know, the whole world's counting on it. Stay tuned. Welcome back. So I want to get right into data. Last week we left off with the beginning of showing you how China had gone into a printing cycle phase. Well, not like we all haven't, right, around the world. We have added literally 15 trillion in new printed currencies globally since the 2008 complete, well, they call Great Recession. I call Great Depression, but we have done 15 trillion in printed currencies and about 150 trillion in new debt. It's amazing. When we left off last week, we were showing China in a reflation phase, meaning they printed money to put into their economy. That went through 2016 and leading up to 2017. So all you saw into the new kind of like boom we had with the presidency and such, starting in 17 and then rolling into 18 here, was all printed, reflated QE around the world. And we left off last week showing you how China's has collapsed to literally negative numbers. So we're encouraged by the changes that's coming, the policies that are coming with the new administration. There are tremendous upwinds, of course, with the whole deep state fight, the socialist fight against it. It's just amazing what we're experiencing in our nation. It's amazing what you're not seeing on the mainstream media. But believe me, folks, Russia and China and the rest of them are not slowing down. So I want to get right into showing you on the Chinese data the difference, because if they're printing money and then coming into negative numbers and they're not telling you, just know they're communists, so they're not always honest. Well, neither are we, I guess, right? What does that say? All right, this is a fixed asset year-over-year percentage change. Now, this is an accumulated year-to-date growth, but I want you to see, after the 18th Party Congress took to their election, you remember I told you about the 18th Party Congress meeting, and President Xi then became a permanent fixture as president of China. Almost a dynastic type of figure now. But they delayed the stimulus, and we'll keep it going until then, but they did. They finally yanked it. Now, as you can see from that 18th Party Congress back then, now to where we're at, there's no growth. China's rejuvenation is really about dealing with the reality they're not growing. They've built cities that nobody lives in. They've done everything they can, and there's no growth. You can't make this up. The chart shows where it is right now today, that not only is there no growth, it's down to the 1999 level after literal trillions and trillions of stimulus and printed currency in China. It's just extraordinary, to be honest. But people don't see that. The mainstream media doesn't express to you the negative numbers. Of course, they're just never showing it, it seems like. I quite don't, well, we all are getting this. To this day and age, everything from corporations, advertisements, everywhere we go, everything's a lie. Not everything, but you know what I mean. There's so many lies, right down to the iPhone, how these articles are coming out saying the end of the cycle for the iPhone and all of this iPhone 10, and you know that's research writing by Samsung. You know, these businesses, they just flat out lie. The claims they make, they're always untrue. Look at all the claims politically made and they're untrue. Everybody's lying. It's astonishing to see how much we've become a conscienceless, integrityless society. I mean, all you gotta do is look at the state of California to understand, you know, logic. I mean, I don't quite get that. So what we want to do is, you know, focus on the data, try to stay away from the mainstream media narrative, be very cautious with that. It's just, 50-50. I understand the market system. I understand being in the markets. But folks, you just have to be cautious. And I really stress being diversified, because the peace of mind will behoove you. It really will. So this is China industrial production. This goes back to really the beginning of 2006, really, when it all kind of went into place. 2007 in August, the euro dollar's existence changed irrevocably the whole situation. As you notice, after that red line in the middle in 2006-07, there was a peak, but then it's collapsed. And we have from 2014 until today, red numbers, folks. This is big. And this is all involved in exports and production and such. And all I know is if they're going that negative percentage change, where do we think we're going with this? For instance, this is the retail sales in China. Now, if China is transitioning to a consumer economy, why are retail sales slumping back to growth rates equivalent to the 90s? Now, it's obvious that retail sales grew faster when the industry did, but as I was saying, the middle class has come up. They're now consumers, and this is true. Now, what's difficult with data is there's a lot of people there, and there's so much reporting that's not taking place. But just in the basic reporting that the Chinese are showing, retail sales in the whole rebalancing of things, going back to 2007 in the Chinese currency, really since the collapse of 2008, has been negative. And yet you probably don't think that, do you, when it comes to the Chinese? But the levels that they're at in consumer spending is back to before the miracle years. And I think that's very telling. Now, folks, this is the economy that allowed the world to slowly dig out of the Great Recession of 2008. And you could see the numbers just don't add up to what the media is showing you. And eventually, this has to come to roost. And one thing that kind of stands out in how we know, I think people more, on my side of the fence, especially when we're involved in analyzing and trying to understand data, is that you have a disconnect. And I was explaining it to one time I had a dinner not too long ago, some good friends. One happened to be an expert equities trader, another one an expert bond trader. And I think for the first time, we've all actually agreed something's not right, right? Something isn't there. And I'm saying, one thing that got me the most are the disconnects. And when I say disconnects, I mean charting. You used to have these things moving together. You would have indices, you would have commodities, you'd have different products, different currencies and such going and working together. And so you would notice the chart, they'd kind of move together. But what I have noticed recently, which I think is a testament to why no one really understands what's going on, is we're having correlation snaps. Things were correlated before. That's how we were able to measure. Now they're snapping. They're diverging. They're moving apart. Now this is a simple version of it, but this is the savings rate in the United States going all the way back to 1994 to the consumer confidence. Our consumer confidence is almost as high as it was right before 9/11, right before that great financial collapse we had. Now, people will say that's 9/11's issue, but you should have seen the numbers. We were just imploded in printing of money. Consumer confidence is out of line. They always used to say, remember the adage, when a cab driver is telling you what stocks to buy, it's probably time to get out. And we've definitely had the cab driver offering advice, folks. This is not right. When you are seeing savings go down to nothing and confidence soaring and everybody's in the markets, and we just got out the other day data that showed not only is everybody out of the markets, TD Ameritrade came out on a headline and said people are out of cash. They're not only all into the market, they're leveraging, folks, at extraordinary rates. And that's the concern. So I have to take a quick break, but let's do that. Be right back.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. I do encourage you, folks who have not yet, who've enjoyed the luxury of a stock market gain, remember the gain hasn't been that substantial. It is, and congratulations, but be diversified. This is not the time to be all in. This is the time you take 25%, 50% off the table and you reallocate into specifically things that have been abused and oversold, like silver, for instance. The derivatives controlling that are staggering, over 600 to 1. So they're definitely hiding something or they wouldn't be doing that. But you need to diversify. It's getting time. So be cautious to that, because there is an issue globally known as, that's right, the dollar debt bomb. And we don't want to go there. And the Chinese and the Russians have been setting up, pouncing on the supremacy of the American dollar for, gosh, probably 8 years now, if not a little longer. This whole time since the Great Recession, they have been slowly, steadily taking down the petrodollar, setting up currency hubs, realigning the currency system, and getting ready to take major market share away from the dollar, which Chinese have already surpassed us in trade. They become the world's largest trading nation, right? So we have to be cautious in the world, being that the data, the real data, is saying one thing, regardless of what they're trying to tell you. So I want you to take a look at this. Who said China lacked soft power, right? China is now substantially more popular than the United States in key Middle Eastern and Latin American countries. And this is that slow takedown I've been telling you over the last 8 years. These countries here listed have literally viewed China more favorably than the United States. And they are all, not these particularly, but they are starting to peg their currencies with them as well. But look at the percentage change in opinion. They're staggering, in these countries, especially in the Middle East. Jordan and Turkey are supposedly our allies. And this is a big deal. Of course, in Mexico, and that's a big surprise, right? But understand that this is taking place. There have been currency agreements struck with China and Pakistan and Venezuela, and Chinese are all over striking currency agreements with other nations, taking the dollar out of the equation. Now, the important thing with this, folks, if the dollar is not pegged as the currency in the middle, so let's say, Italy wants to buy a TV from North Korea. They would first buy dollars, do the deal in exchange. North Korea is probably not the best example, but you get my point. They would do the dollar as the intermediary. That's no longer taking place. The Chinese yuan has gotten to a point now where it runs its own trade. And all that we really have left, folks, honestly, is that SWIFT system. And the SWIFT code that you always hear about, probably never really paid attention to, is the interbank transfer code from one country to another so companies can do trade. It's how they do wires of money. But the Russians have their own SWIFT system now, their own interbank system. And they're right there with the Chinese on the takedown. So I'm extremely concerned because I do see what's taking place. Even if the Chinese economy goes through a recession, which is obvious what we're seeing is happening, The rest of the world's probably going to follow. Now, I don't know what this is. Is it a 5–10% correction in the market? Does this cascade the derivatives? Does it make the bond derivatives and all these interest rate derivatives go through the roof? Does this cause another epic 2008? I'm not certain, but it's definitely obvious that the economies, no matter how we want to try, can't just blow up this way. You can't continue to fire gasoline into an engine and not think eventually it's going to get out of control. It just is the way it is. And I'm talking about stimulus, economic stimulus, printing of money and such. Why don't you take a look at this? This is a Fed balance sheet versus the S&P. Now, the important part here is the blue line is actually the Fed's balance sheet as the right axis there, up to $4.5 trillion since 2008. And folks, if we have printed $4.5 trillion since 2008 just in the Fed here in the United States, do you feel that wealthy? We just did a small little discussion about how the wealthy, the top 1%, have really gained almost 82% of all the wealth over the last 8 years. We, the people, are being left in the dust. So as you can see the blue line, where that blue line went, as they were printing money, of course, the markets follow. So the stock markets follow the quantitative easing, the money printing. Well, if you've noticed there at the top, the money printing has stopped. But what has the S&P done? Now, the black line being the S&P, the left axis, it's actually dropped. But what's unique about that, it started to rise again significantly after this chart was done. It shot back up, the S&P. That is, I believe, the parabolic blow-off. So we're going to get more into that, but I have to take a quick break. We'll be right back.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Okay, so we were talking about a parabolic blow-off, and I actually have some great data. One of my team members was pointing out that, there were so many days it took for the Dow to go up 1,000 points, and this last 1,000 points was so extraordinarily quick. There's something about a parabolic blow-off. Now, many people are going to argue on the financial side, oh, it's not a blow-off. It's just a regaining of confidence because of all the money coming back, and there's going to be great, and I mean great, stories pitched by financial advisors and those in the mainstream fiat world. But folks, in the end of the day, what you're holding in terms of dollars is not nearly the buying power it used to be and is going to get far worse soon. Look at this chart as an example. The median family net worth. Now, this goes back to 1989. Just after the major crash we had in 1987. As you can see in 1989, roughly to 2007 or so, right before the big Great Recession, the median family net worth was about $120,000. And if you notice, it's down to $78,000 today. Down literally to the 1992 level. I mean, think about that. We're talking over 20 years. And yet that's not accounting for the inflation, meaning the ability of that dollar to buy. Can you imagine what you could buy with $1 20 years ago? And so if your net worth is equal to the net worth it was probably 20 years ago on a median family income or median family net worth. But yet the dollar's not buying you the same. I would say that 78,000 is really probably more like 50,000. That's not good as far as the ability for future storage and savings over time, like wealth building over time, protection, preservation over time. It doesn't look good for that, you see, because it depends what your dollar is in. And I know people in the market, so you hear the conversations, hey, I've had 300,000, now it's worth 340, everything's going great. Yeah, but what is the buying power of that paper money? What has happened to the buying power? Do you think with these tax cuts and everything else that I think are good, I'm glad, but do you think that's not going to cause an inflation in a deflationary world? It's amazing to me what we're seeing. We are going to have extraordinary inflation. I'm not even surprised if we see a commodity cycle start coming back into play. And I think the central banks will be behind it. But if a commodity cycle is ready to come back into play, folks, that means oil will be going up. That means silver will go back to these highs. But it also means that stock market's coming out. You should go do your data. If not, sign up for Twitter. Go research my Twitter past. I think I had a tweet out there one time linking to a story talking about the central banks and a chart, a dynamic chart, showing how the commodity cycle is getting ready to take shape, which means that stock market has to come off. So you just got to be cautious to that. But one thing I wanted to outline here is the commercial and industrial loans, real estate loans. This is interesting to me because from going back not just into the 90s and 70s here on the chart, but just going back to the Great Recession they had. You can see the collapse there on the right side, the big gray strip there. And look at the collapse in the blue line. And then, of course, red collapse too. That's real estate. The blue is commercial industrial loans. And then, of course, we came back. They started lending money. Everything started booming. We printed all these trillions, right? Well, look at since really about the peak of 2015 to 2016. Now, remember these dates because remember how they correlate with the Chinese and everything else going on. Look at lending on commercial loans since the 2016 timeframe. That's right, folks. It's collapsed. It was up to 12%. It's changed, and now it's dropped down to 0. Meaning it's a tremendous drop in the ability to loan or loaning. Real estate loans, if you notice on the right there in the circle too, yeah, real estate loans have pulled off as well. What are they trying to say? Are they trying to be extra cautious because they know something's not right? I have to wait and see, right? But there's another chart here I'd like to show you regarding the economies itself. This one goes back, the same thing where you get into loans and such, but look at how the chart, now this was actually the zoom of that last chart with commercial loans and such. I wanted to zoom up on it because look at the blue and the red. Look at how they've come to 0 and then crossed. Real estate hasn't crossed like that in some time. Last time it crossed over really at that point was in the collapse of 2008. But isn't that extraordinary? That was a zoom up of the real estate loans and commercial lending loans. Now, folks, this is interesting because the economy is said to be booming. Everyone is doing phenomenal. And, you got these bonuses and these tax cuts coming, but yet loans aren't materializing. Real estate loans are slowing down. Are banks trying to tell us something? Are the finance companies trying to tell us something? This is going to be interesting. So you have to pay attention because the data is the data. Now, I know we've been talking about this for a few years, but what's interesting that we found is the data was accurate, but when you're printing literally trillions and trillions of dollars globally, obviously there's an effect. And we're focused on truth when our world went into kind of like a collective lie, printing money out of thin air and printing bonds out of thin air and then buying other bonds that are printed out of thin air. And so you got these bonds that are fake, buying bonds that are fake, and then they're swapping them to create some kind of value or currency and then printing currency to do it. I mean, it's just extraordinary. Something's going to give. I'm not a proponent that this goes on forever because it's not real, number one. It's not sound. It's not honest. It's corrupt and it's thievery to we the people because of buying power and inflation on what we hold in our savings. I just don't buy it. I don't believe this is going to play out this way. Although it has, I would rather be safe and have peace of mind than be chasing some rabbit down a hole. And believe me, it's a big rabbit hole. So when we get to the federal debt, the total consumer and credit debt, that's an interesting one to see. So on this chart, I wanted to illustrate with you that if you notice on the right side, the big bar, that's the 2008 collapse. And so consumer debt and federal government debt has been steadily rising. And then in 2008, the consumer debt slowed down. And then what happened slowly after that? The consumer debt went straight up. I don't get America. If you don't take this chart seriously, you may want to think about it. This is showing you debt of a nation and of a people. And if you notice, since we came up with this fake Federal Reserve note, if you've noticed, Federal Reserve note meaning slave instrument, it's a debt instrument, we have done nothing but go into debt. Remember what the Bible says? Borrow will be servant to the lender. This isn't good. But you see, when the economy is so bad, when we're not earning the money, inflation on goods and services, people are struggling. It's hard to get by. It's hard for young kids to start a life because these numbers are destroying our buying power on the dollar and our ability to have goods and services exchanged easily because that dollar doesn't buy us the same. So you have to take this seriously. Now, could it keep going up? Yes, but remember, physics is physics. What goes up must come down eventually. And this debt level is unsustainable, and we in the kingdom should heed that. So all the euphoria in the markets being a 45–50% increase, let me ask this question here. How much more can the stock market go? 10, 20%? Let's give it 20%. Fine. Let's say your total gain since election was 65%. When this thing goes, we don't know if it's going to be just a small correction or a massive collapse. Many people think it's a massive collapse because there's a new global currency and a reset in order. And I think in order to do that, they need something bigger like war. But you never know. So if we're in this cycle and we're faced with high debt levels and the cycle seems rosy, we have to be prepared as kingdom members especially. Be cautious, because what is 65% gain if that's the case? So if there's a 20% gain possibility, what do you think that possibility is in other areas if something's this high?